To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.
Hello people, welcome back to the same paper, and here we go. This is the paper. Where is the paper? This is a question of the paper. This is 2019 Northwestern Province third term paper. That's right. So let's first write it down. Which year? 2019. It's a provincial paper, province of Northwestern. Yeah. And third term. Yeah, third term. Yeah. Third term paper. Third term paper. Paper 2. This is paper 2. All right. We have already done 4 chapters of this paper. First question, the compulsory question. Yeah, the must do question. In the chapter 1, we have finished the first question in chapter 1. In chapter 2, we finished the second and third questions. In chapter 2, second and third questions. Chapter 3, we finished the fourth question. Chapter 4, fifth question. This is question number 6. Right. So, here we go. A. What is a bank overdraft? What is a bank overdraft? In 2 letters, we know what it is. It's an OD. I don't think there is anybody who do not know what is an OD. Who raised the hand? Nobody raised the hand, right? An OD is a short-term loan given by a commercial bank to current account holders only. Okay, when the current account is overdrawn, that's how you say it. When the current account is overdrawn, over. If the balance is 100,000, if you write a check to somebody that is 150,000, that guy will go to your bank and take 150,000 out of your account, but your account balance is only 100. He is trying to take 150. Who wrote the check for 150 more than the balance which is in your account? Who wrote that check? You wrote the check. So it's you who's gonna get the overdraft from the bank. So it's a current liability to you. You have to pay it back. When the current account is overdrawn, in other words, you can say it like this. You can say it like this. When what is a bank overdraft? Yeah, the excess amount, more than the available amount, excess amount drawn, it's like drawn from the current account exceeding the balance, exceeding the balance available the excess amount withdrawn from the current account exceeding the balance available in the account. Using checks, overdrafts are given to current accounts only, not given to any other account. Okay. Next, name the elements of production cost. You can write direct costs, direct material, direct labor, direct other. Or you can write in a different way, prime cost. Prime cost. If you write prime cost, you don't forget this point. If you write prime cost, don't forget to write overhead cost too. Okay, prime cost and overhead cost. Overhead cost. Okay. Under prime cost, all the direct costs are lined up. Yeah. What are the direct costs? Just like I was trying, I tried to write before I wrote prime cost, I tried to write direct costs. Now you can write direct costs under prime cost. Under prime cost, direct material cost. Direct material cost. Direct labor. Direct labor. And direct other costs. Yeah. Direct other. These are the elements of production cost. First the prime cost, then the overhead cost, right? Under prime cost, 3 elements are there. Likewise, under overhead cost also, another 3 elements, you can write them down. Can you? Don't look at me. I can. Can you? You've got to know these things, guys. Otherwise, how can you face the exam when you get an exact, definite question or questions from production cost? When you are gonna get definite questions exactly from the production cost statement from that lesson, how are you gonna answer your paper? How are you gonna answer that question? You got to know these things by now, Prime cost. Overhead cost has again 3 elements: indirect material, indirect labor, and indirect other. All indirect costs. All the indirect costs, the addition of all the indirect costs is the overhead cost going on. Following information relates to a flower vase manufacturing business. Month of May, good business, flower vases. Malvas, Malpochi. There's a business going, selling Malpochi all over the island, all over the country. Like that business, these guys are producing flower vases. Okay. We have production cost right here. Production overhead cost. Children, that is production overhead. Nice. Then we have total production cost. Very nice. Direct labor also given now. Direct labor also given here. Direct labor cost. Direct other costs are also given. Very nice. And cost of a flower vase. Cost of one. Which means that is the unit cost. Is the unit cost, okay? 60 to produce one unit, one flower vase. Required. What is required? Amount of flower vases produced for the month of May. The amount of flower vases produced for the month of amount of flower vases. How many produced? OMG, so easy. Just one calculation. A. If the total production cost is given, children, total cost is right here, 90,000 total of the cost which was spent to produce all the flower vases. And if cost of one to produce one, 60 to produce one flower vase, unit cost is 60. Is 60. How many flower vases produced for the month? Produced during the month. Easy peasy lemon squeeze, right? Divide. Entirely for the whole month, 90,000 is spent, right? That 90,000 is the collection of all the vases produced. That 90,000 is spent for all the vases produced in the month. One flower vase costs 60, then 90 divided by 60, you get amount of number of vases, flower vases. Cut the zeros and divide 9,000 by 6 becomes how much? 1,500. That is the amount, the number of vases produced. Yep, done. Next one, B. Direct material cost. No, not a big deal, okay? B. We have to calculate the direct material cost. Hey, hello, do you understand this? The total production cost is given 90,000. Okay, out of that, overhead cost is given 30,000. Total production cost is calculated by adding prime cost and overhead cost. Okay, out of 90,000, overhead is 30, then prime cost is 60. Yeah. Write it down. Write it down. Prime cost prime cost equals total cost you subtract from the total cost, you subtract from the total cost, you subtract overhead. Overheads you have to subtract from total cost. Then you get the prime cost. Total cost is like we took right here. Yeah, total production cost is 90,000. Let me use the same color. Same color. Okay. This is not needed, but I'll just do it anyway. 90,000 minus the overhead cost, which is given here, 30,000. 30,000. And the prime cost becomes how much? 60. 90,000 minus 30,000, 60,000. Prime cost becomes 60,000. Okay. Okay, got it? Then, my dear children, if the prime cost is found, that is this. If the prime cost is found, prime cost is formed with all the direct costs, just like I did right here. See, see, prime cost is consisting of all the direct costs. Prime cost is made up with all the direct costs. Then, my dear children, you have the answer, right? If prime cost is 60,000, out of that, direct labor is 15 and direct other is 5. 15 plus 5, 20. You subtract 20 from this. To find direct material cost. To calculate direct materials cost. 60,000 subtracted by 20. You subtract 20 from 60. And the answer is 40,000. Got it? There we go. 40,000. That is direct materials. Yeah. Because if the prime cost is 60, is consisting, 60 is made up with 3 direct costs. Direct material, direct labor and direct other. But here you have direct labor and direct other. Subtract those two from prime cost. You are left with direct materials. That is what we did right here to find direct material cost for the month B part, like this. Okay. Done. What is this? Oh yeah, what is it? It's a correction of errors question. Like it? As always, it's given the trial balance prepared by Pereira's business, blah blah blah. It did not tally. Okay. That is how they give correction of errors. That is how they give. That is the normal way that you are going to get. the correction of accounting errors question. The trial balance of whoever prepared by Pereira or Silva or Vanigasekar or Ratnapala, whoever it is. Trial balance did not tally. Then you know that there are errors. Okay. A difference of the trial balance is transferred to a suspense account. Difference, suspense, count, recorded. Errors are given. 1, 2, 3. 2, 3. What is required? Required. Oh, what is that? What is required? Required is this. Journal entries to correct the errors. Then suspense account. Okay. But the suspense account balance is not given. What are we going to do now? Suspense account balance is not given. We have to find it. That is the question. Right? We have to find the balance of the suspense account. Now, let's take the basic information first. Trial balance, Pereira's business, 31st December, didn't tally. Okay. Difference recorded in a suspense account. But difference is not given. How much is the difference? We don't know. Now they are giving us the errors. Later reveal the following errors. When we correct all the errors, the suspense account will be ruled. Ruled out. Like cancelled off. First, let's correct the errors. Here we go. Journal entries to rectify above errors. Rectifying means correcting. Correcting should be done in a trial balance, right? Correcting the errors to write the correcting entries, rectifying entries. You write it and you write the entries in a trial balance, right? No! You write the entries in a general journal. Here we go. General journal, debit and credit. Okay. General journal. Date, description, details column, then debit column and credit column. There we go. Okay. Done. Ledger folio is not needed. Okay. The first error is this. Purchase invoice 21,000. Completely omitted. Oh my god, easy. Purchase invoice means a purchase done. Purchased goods for the business. Done on credit basis. Otherwise, you don't issue. The business should not issue purchase invoices. Purchase invoices are issued for credit purchases only. You know that. I know that. You and I and we and everyone knows that. Credit purchase, this transaction is not recorded in the books. Omitted. Completely omitted. What shall we do? Record the transaction, the double entry. Then the error is gone. These are the most simple errors. You know that. From the beginning. Yeah, you know that. Yeah. Most simple errors are the omission errors. Just record the double entry of the transaction and it's done. Mm-hmm. 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 Purchase invoice 21,000. So what is the double entry? Purchases account debit 21,000. Cash account credit, right? Cash account. No. Don't forget your basic double entries now, huh? Not cash account. It's a credit purchase. Didn't I say that it's a credit purchase? Didn't I say that purchase invoices are not issued for cash purchases? If you purchase goods and pay cash then and there, that source document is not needed. This source document is needed for a credit purchase, okay? Purchase invoice. Then purchases account debit, creditors account credit, because it's a credit purchase. Creditors account credit 21,000. Done. Don't forget the narration. You write the narration. I will not write the narration. Okie dokie. First one is done. Electricity bill paid 500 has not been recorded in electricity bill account. Oh, bill paid in cash. Okay. Cash account is credited but not recorded in the electricity bill account. So the debit entry, credit entry in the cash, that is done. Debit entry is not recorded. So the debit side becomes short. Trial balance is effective. Not like this one, first one. In the first one, no trial balance, no effect on trial balance. No problem to the trial balance. Yeah? So the first one is like not a big deal. Okay. But the second error is an error which affects the trial balance, because one side is short, not like this. Now let's correct that, shall we? Electricity bill paid 2,500, not being recorded only in the electricity bill account. What we are going to do is we are going to record it in the electricity bill account. Electricity bill, it's an expense, so the electricity bill account is debited 2,500, credited to cash account, that's a cash book account or book, whatever, let's say cash account, credited, right? No. These are the common mistakes that you do. Always you do these mistakes. People, come on. They say electricity bill paid 2,500 has not been recorded in electricity bill account only. It is recorded in the cash account, credited to cash. Debit entry is the one that is not recorded. Debit path, electricity bill, debit. That debit entry only is not recorded. Now we recorded that now. We recorded that. But where to credit this 2,500? Because if an amount is debited, it must be credited somewhere. That is the double entry rule. Yeah. So what? It's an error which affects the trial balance. I told you before I started the error. So when correcting errors which affect the trial balance, one entry must go to the suspense account. Credit entry goes to the suspense. Suspense account credit 2,500. Done. Write the narration, okay? Don't let me say it again. Don't let me do it for you. Next, discount received 500 has been debited to the discount allowed account. Who is this bookkeeper? Man, what errors are these errors, huh? Okay, these are normally errors which happen in a business. Discounts received 500. Discount received is a income. Income accounts are credited. But the error is which should be credited is debited to discount allowed account. Debited to the discount allowed account. What we should do is cancel off this debit entry from the discount allowed account. So, debit entry, to cancel it, discounts allowed account should be credited. Discount allowed should be credited. Yeah, to cancel. It has been debited, no? See, debited to the discount allowed account. That's an error. To cancel off that, you credit. Discount allowed credit. 500. Then the right place to record it is discount received. Discount received is an income, so it is that account is also credited. We must enter that also. Discount received 500. That is the correct place to record it. Where discount received account. Now we record that discount received account also credited. Now what? Now what? Now what? Suspense debited. Suspense account is debited. Now the debit entry is left now. Debit entry goes to suspense account. 500, 500, both should be debited here. 1000, 1000. Bingo. Done. Journal is completed. So journal entry is done. Now suspense account. We'll draw the suspense account here. Like that. Name it. Real quick. Suspense account. We don't know the difference of the trial balance. They haven't given us. I don't know. See, they haven't given. See, man. Trial balance prepared, did not tally, difference recorded in a suspense account, but no difference is given. It's up to us to find the difference, just like I said before. Let's do it. Which entries actually was entered to the suspense account? This one, no suspense account. This one, suspense account is there. It's credited. This one also suspense account is there. It's debited. Enter those entries to the suspense account. Here suspense account is credited 2500. Let's credit that 2500 right here. What is the description should be? What should be the description? Electricity bill. electricity bill. In the third one, in the first one, no suspense here in this first correction entry, no suspense involved. Second and third both has suspense account involved. See, this is now we have recorded this 2500. Okay, now the third one, suspense account is debited, DR, with 1000. Put it to the debit of the suspense account, 1000. Inscription is discounts. See, discounts. Discounts received and allowed, both are involved. So you say discounts. Done. That's it. Balance it. And you will get the original balance of the suspense account. Original balance. The higher, greater total is in the credit side. Put it to both sides and subtract 1000 from it. 2500 minus 1000, 1500. That is the difference of trial balance. See, man, that's how you do it. Well, if the difference was originally given, guys, if the difference was given like this 1500, if it was given here, the difference recorded in a suspense account, and rupees 1500. Likewise, if it was given, first you should enter that difference to the suspense account. They should give the difference recorded in a suspense account debit. Likewise, they should give debit rupees 1500 or credit or whatever. In this question, it is a debit. Debit rupees 1500. Likewise, they should give. If it was given, first of all, you enter that to the suspense account. Yeah. If it was entered, both sides will be equal and the suspense account will be ruled off. See, this side also 1500 plus 1000, 2500. This side also 2500. Done. Suspense account cancelled off. Yep. Oops. Here we go. This is your suspense account with the correction of errors. Voila. Next question. Oh, ho, ho. It's a bank reconciliation. See, just like the correction of errors questions, when you see the balance of someone's bank account was this much and the bank statement had a different balance, blah, blah, blah. You know that these kind of questions are coming from the bank reconciliation. Yeah. So the balance of the bank account. Whose business? Viranga's business, 42,000. Month of November 2019. On that day, the balance of the bank statement was not equal of the to the balance of bank account. Following reasons were different. Typical, classic bank reconciliation question. What we need is adjusted bank account and the bank reconciliation statement. Let's do the adjusted bank account right here. Adjusted bank account. We start the adjusted bank account with the given bank account balance, which is here. Balance of the bank account, blah blah. Bam bam boom. Balance of the bank account was 42,000 for the month of November. Put that to the debit side, 42,000. Balance brought forward. Done. Then check the reasons for the difference and mark the reasons which should go to the bank account. You should know how to select those. Let's see. Bank charges go to the bank, to the adjusted bank account. Why? Bank charges are charges that we don't even know, but the bank has taken charges from our account. Horing. Gana kapa gana. That's like, it's a joke. But the bank has taken bank charges, which means we should enter them to our bank account, adjusted bank account. Deposited but unrealized checks. We have deposited. If we have deposited from our end, it's already there in the bank account. No need to re-enter. Debtors direct remittances. Oh, debtors have put money directly to our bank account. We don't know. Then we should record. Issued but unpresented. No, these two should go to the adjusted bank account. Let's put them right here. Okay. Bank charges should be credited 2,500. $2,500. So that's entered and done. This one, direct remittances coming into our account, cash from debtors, debited 6,000. Should be debited 6,000. Direct remit. Direct remit. Nice. Okay. It's done. Yeah, so what? Balance it. Balance it. You have to balance this one. Let's do it real quick. Which side is having the greater total addition? Debit side. 48,000. 48,000 and subtract 2,500 from that. 48,000 minus 45,500 is the balance carried down. Adjusted bank account is done. Now to the bank reconciliation statement. Let's draw a bank reconciliation statement here on this side. Okay, right. Likewise, very simple format. Bank rec. That is the short form. Start the bank rec with the adjusted balance of the bank account with this one. 45,500. That is the balance as per adjusted bank. Balance as per adjusted bank account. $45,500 coming right away from the adjusted bank account. It's 45,000, right? Yeah, it is. Now we know what entries to enter. We have this one and this one. Deposited but unrealized checks. We have deposited. When we deposit, we know that our bank money is going to increase. So we record as an increase in our bank account. But they are not realized. They are not gone to the bank. So bank balance has not yet added these 12,000 of checks. So we deduct them. Deduct or subtract. Minus, subtract, unrealized. Unrealized checks. How much? 12,000. Okie dokie, within brackets, we are going to subtract 12,000 from 45,000, and the answer is 45,500 minus 12,000. How much? 35,000. 33,500. And we get 33,500. To that, you add the issued but unpresented checks. Why? Because we have issued, when we issue checks, we know that for those checks, those guys are gonna go to our bank and take the cash for those checks. And that is a decreasement of our bank balance. When you issue checks, those guys, for those checks, they're going to take the cash. So our bank balance from the bank account decreases. That's why issued checks are normally we credit. But those checks have not yet been presented, issued but unpresented. So bank has not yet deducted. That's why we should add them again. Plus unpresented checks. Unpresented checks. How much? 9,000. With that, we are gonna finish this question because 33,500 plus 9,000, 42,500. Done. Okay, you have to write this description. Balance as per bank statement. STMNT statement. 42,500. That's how you say it. Okay, if you want to look at the entire thing, there you go. You have the last part of the sixth question of this paper. It's a bank reconciliation question. Done deal. And we are going to end this session with the bank reconciliation question. This is the last part of the 6th question. Oops. There we go. We have got a small question from production cost also, and this is the start of the question. 6th question of the Northwestern Provincial paper, 3rd term of 2019. So children, we have only one question left, then the paper is over, finished. We will tackle that in the next video. Do keep your focus on your studies. You do this subject and take an A for the subject. Exam is just around the corner, just 1.5 months, maybe 2 months away. You know who's gonna be the most happiest people in the world? If you finish your exam, if you sit for your exam and take A's for all the subjects, including this, you know who's going to be the happiest? Your parents. Okay, make them happy, make them proud. Let's work out these papers and prepare for the examination. I'm going to see you soon. My name is Prabhat Ranasinghe. Have a good day. Do your work, as I always say. Thank you.
To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.